once. I'm trying to do once a month. So I did. The first one was this guy named Oscar, who I met from BP, who invests in the Midwest. Um, the second one was my cousin. The third one was Lydia.
Lydia Wynn?
Yeah,
Yo, I
yeah,
love Lydia Wynn.
yeah,
She
yeah.
was gonna come tonight, but she's away.
Okay, yeah. We had a good combo with.
She's like quirky.
Yeah, yeah. She's
Yeah.
cool. She's really cool. Did it start already or no?
Oh,
Okay.
okay.
And you're the fourth.
All right, let's do it.
Yeah, dude. Thank you, man. Thank you for making it, man.
Yeah.
I know it's been been a long time coming, and I think one of the things that a lot of potential buyers that they're curious about when they're shopping online for just for help with their purchase or investment, one of the main pieces that they have to put together is finding the right lender. When you have the right lender, or when you just have a lender, let's not even say the right lender, but when you have a lender, you can get a pre-approval letter, and the pre-approval letter is kind of like your hall pass to go to any open house or schedule showings for properties and things like that. But people shouldn't just choose any lender, right? So
That's right.
how do you think people should go about like vetting a lender? What are some things they should look out for and some things that they should ask?
So I think the most important thing when it comes to a lender, first thing, just like everything you said, the lender is such a key part of this whole process because that's where it all starts. If you have a lender that is excellent, the process is going to go smooth. You're going to know the numbers early on. It's going to be a lot less stressful as opposed to if you just randomly find the first lender and you don't ask around, and it can be brutal. Your pre-approval could be wrong. The numbers could be wrong. You might not know the fees. So, when you're going to go and try to find a lender, and when should you do that? That's the big question. And you should do that when you think, all right, I want to buy a house. Whether it's 2 months, 6 months, 12 months. If you want to buy a house, you need to talk to a lender first thing to know what you're approved for.
So you think people should get started like up to a year in advance?
Absolutely. Absolutely. Because what you want to do is you want to ask around, you want to Google people, you want to look at reviews, you want to find a lender who is highly reputable. And when you meet this lender, you want to check them online, you could look up Zillow reviews, and you want to ask them a few questions. You want to ask them, number one, do you work for a bank? Do you work for a broker? How many investors do you have? Now, what that does is, as a lender, if I'm going to give you a loan, I can sell it off to 10 different investors. That means I have 10 different investors' rates, 10 different investors' programs. You don't want to just go to one bank and they can offer you one rate and a select few of programs. So that's the first thing. You really want to ask a lender how many investors they have.
How many should they have?
10, 11. We have 10, 11, and I feel that we're always competitive when it comes to pricing. And I feel that it's very rare someone comes to me and they have a program that I don't have access to.
Got it. So if somebody has at least 10, if a lender has at least 10 investors, this gives them access to enough different different rates, different loan products out there to find the most competitive and maybe the most appropriate given that buyer's
Absolutely.
buy box.
Yep.
Nice. So all right, so you mentioned like asking how many investors the lender has and whether or not they work for a broker. What are some other questions or things to look out for?
So it's important that you feel comfortable with this person. When you're getting a mortgage, this lender is going to look at your tax returns, look at your W-2s, look at your pay stubs, run your credit. They will know more about your finances than you do. So you want to make sure you're comfortable with them. Whether it's, look, I'm a 39-year-old dad, I have 2 kids, so are you. We're very comfortable together. If you're working with someone who, I don't know, you have different beliefs, you have different hobbies, and you just don't connect, you might not want to work with them. You want to make sure you're fully comfortable with them, you feel that they're good at what they do, and you feel like you can trust them.
How do you move past that though? Because I feel like, and thank you for that, right? Like I agree with you, right? You're sharing all of this sensitive information. However, we'll talk to somebody who's in the sales business. I'm in the sales business. You are. A lot of times that first conversation or two, they sound very like inviting, what are some like red flags, I guess, when you move on in that relationship? So maybe the first conversation goes pretty well. What are some things that could stand out
Great question.
that could like lead to somebody saying, I don't know about this.
Great question. Something I always say to my clients is communication is arguably the most important part of the process. So when I'm working with my clients, whether they text me at 9 p.m., whether they call me, sometime on the weekend, I'm not going to say I answer every single time, but I always get back to them very quickly. I will never leave my client over a full weekend or over 2 days worrying about a question that I can give them the answer to. So a first conversation is great, but a lender needs to do more than that to prove themselves. You need, if you are going to shop lenders, which you should, you want to see who you're comfortable with. You want to see who has the right amount of investors, who has good rates, so on and so forth. Over the first few weeks, see who, when you have a moment that you're thinking, oh my God, I can't believe I didn't ask this question, and I hope this isn't a big issue. Yeah. Who's the person you call first and that you feel is going to answer and give you the right answer?
Got it. Yeah, that makes sense, man. Do you ever have any involvement with somebody outside of, let's say, the direct client? So let's say responsiveness and communication is very important, like you mentioned. Does that ever translate to different conversations to get a deal done or to help somebody secure the best mortgage? So, for example, let's just say a buyer is working with you, right? And they just placed an offer on the property. Do you ever communicate, let's say, for example, with the listing agent of that property to kind of like, I guess, further plead the case for the ability that you and the buyer have to close on the deal? Does that ever
I
happen?
will talk to anyone that is involved with the deal that wants to speak to me to get more clarification on my client's qualifications. Of course, I have to okay it with my client, but there are times where, yes, listing agent, very common. If my buyer is putting an offer on your listing and you see the pre-approval and everything looks good, you're going to want to talk to me. You want to make sure I know what I'm doing. You're going to want to make sure it seems like I have a good handle on the file, right? There are times where my client needs to file their tax returns. And when people are self-employed, there's a lot of intricacies that need to be exact on their tax returns in order to qualify for the mortgage. There have been times where I go meet their accountant with them. I'll go sit with them in their office, make sure everything gets done right. There are times where, an attorney is communicating with the other attorney and they want to put a seller's concession in the file. They want to know the rules of a seller's concession. Can you do 6%? Can you do only 3%? For example, if you're putting 5% down on conventional, you can only do 3%. If you're putting 10% or more, you can do a 6% seller's concession. So to answer your question, it all comes back to communication. I will communicate with anyone that will help the deal move forward, and that is one of my biggest strengths, because from what I've been told and being around the industry for a while, not everyone will take the time and put the focus and effort into doing that.
Yeah. You mentioned seller's concessions, right? So there's a cap on the amount of the concession that's allowed depending on the loan to value. What are some things that buyers use the seller concession for? Why do they negotiate to
So there's a couple of different things. Now, I'll give you an example. Sometimes someone will come to a deal and they want to buy $1 million property, and they have great income, they have great credit, check across the board, but say they only have like $50,000, which to a novice, someone who's never bought a home, isn't in the industry, they'd say, well, 50,000, they only need 3.5% down, so they have 35,000 and then 15,000 to spare. A novice might not know closing costs and how much closing costs can be in New York State. It can be 5 or even 6% of the loan amount. So it could be, $50,000+ in this situation. So now a seller's concession, what often will happen is if the agreed upon price is $1 million, maybe they'll make the price now $1,150,000, and now they'll give back a $50,000 seller's concession. Now the client can borrow their closing costs and finance it into the loan, right? So that's number one. Number two, sometimes if the value comes in high enough, meaning if the price is $1 million, maybe the value comes in 1.1. Now you have equity to work with. So you may work a seller's concession into the deal halfway through once you see the value is there, because we can lend 96.5% of the value, right? Sometimes people may have enough for down payment and closing costs, but they may say, you know what? If I could borrow an extra 30,000, I'm going to take that and buy down my rate with it. Now, people hear points, and it used to be people would hear points like, I'm not paying points. I don't want to pay extra fees. People have gotten a lot more educated over time. And now a lot of people are aware that there are discount points where you can pay a premium up front to lower your interest rate. Some people don't want to do that because they don't want to lay out the extra cash. But if they can borrow that extra cash, not have any more money out of pocket, lower their rate and lower their payment, that is something a lot of my clients do and is a huge benefit of a seller's concession.
Yeah, I mean, that sounds huge, because if you're going in, like you mentioned, you have the down payment, you have the closing costs, but now the appraisal's coming in higher, you have a little bit of equity that you can kind of play with. If you can lower your monthly payment, it might make sense to use that concession. What do you have like any examples of that? Like how much roughly people are saving month to month as far as like their monthly mortgage by using the concession to buy down the rate?
There's one that I'm working on right now where it's a refinance. It was someone that I did a loan for a couple years ago. Their rate was like 7.25%, and now they're getting their rate. At first, when we were pricing it out, this was last week, rates had hit like a 4-month low, and I was able to get the rate to 5.625 with no points, right? Which is great, and it was a $650,000 loan. Now, if they made that 650 loan 665, now they're borrowing an extra $15,000. They can take that $15,000 and buy their rate down to 5.125, and it lowered their payment an extra $150 a month with no extra money out of pocket. Now, that example wasn't a seller's concession, it wasn't a purchase, but it's an example of how much you can lower your payment by borrowing the funds to buy down your rate.
Got it. Yeah, I mean, that definitely goes a long way, saving $150 a month in that case without having to put any more money down.
Every dollar counts, absolutely.
Yeah.
Some people, everyone is sensitive to different things.
Yeah.
This person said to me, I want my payment to be as low as possible. There have been different clients where they're saying, you know what, I want to refi, but I don't want to take any more money out, take any more of a loan than I have to, because I'm probably going to sell the property in 2 years. If you're going to sell the property in 2 years, you may not want to borrow money to buy down points, because now you owe more money, and when you sell the house, you're going to walk away with less, and you're going to have a lower payment for only 2 years. So every situation's different. I don't want to make it like that situation works across the board, but it all circles back to why you need a good lender who is going to see a certain situation compared to a different situation and ask you what your main goals are, because without asking you what your main goals are, they can't really give you the best advice.
Do people ever like share with you like their long-term plans? And if so, how does that, is that something that you would want people to always disclose to you or to any other lender? Like, how important is that to say, hey, I want to refi now, I'm planning on selling this in 2 years, and then I'm planning on buying something else? How does that play into the strategy, I guess, when it comes to like choosing different loan options?
Great question. I know the long-term plans for every single one of my clients, because everything carries over to the next when it comes to taking out a mortgage. If you take an FHA loan out now and you want to buy a new primary residence and move in 2 years, unless you're changing jobs and moving 100 miles away, it is very difficult to get another FHA loan. So if that's your plan, maybe instead of an FHA, I'll say, you know what, you could put, instead of 3.5% down, 3 to 5% down and go conventional. And then it's a lot easier to buy another primary residence in a couple of years. So yes, I always want to know your long-term plan as far as the subject property, the one that we're doing the loan on at the moment, because I want to see, does it make sense to buy down the rate or not? I also want to know, are you planning on buying more and more investment properties? Are you planning on moving in a couple of years? I hate to give the same answer again, but without knowing the long-term plan to the T, no lender can give you the best advice.
That's sound advice, because I feel like, this day and age, our attention span is not what it used to be, right? So we're very much like short-term minded, I guess, right? So what you're talking about is like, hey, I want to know what's going to happen for the next 5 to 10 years. Whereas I feel like, and you correct me if I'm wrong, but I feel like a lot of times when people are thinking about speaking to a lender or how to decide which lender to work with, they start with a very short-term focus, which is the interest rate, right? Focusing, hey, what rate can this person get me? Do you recommend that people ask this like right out of the gate when they're vetting a lender?
It's such a hard question to answer. I'm glad you asked it, but I just want to take a second to kind of word this the right way. Your mortgage rate is incredibly important, and you want to make sure you're going to get the best rate. Sometimes people think it's as simple as let me call 5 different banks today and see who has the best rate. Unfortunately, it's not that simple. The main reason is rates do change every day, and you may not, there's a good chance you're not going to lock a rate that day. Because when you're calling lenders, odds are you're doing this well before you're in contract to buy something, right? And maybe a lender can lock you for 75 days, but then the rate's going to be higher than if you lock 30 days, right? You also want a lender who you feel is smart and pays attention to the market, because there are times where it's not as much about who has the better rate as who has the better timing. You know, whose thoughts are you going to be aligned with, where, you know, me and you might be talking and I might say, look, you know, rates are 6% right now. I think if they get down to 5.875, we should probably take it. What do you think?
Take it meaning lock it?
Lock it.
Yeah,
Lock
yeah.
it.
Okay.
You might say, you know what? I'd rather take my chances and I want to get 5.5. And if I say, look, then we're going to wait longer, and who knows what's going to happen in the world and with politics and the economy, rates may go up. It's a little more risky. And if you say, okay, then all right, we're on the same page, you know? So you want someone who has a plan for when they're going to lock. Now, the thing that's unfortunate about this industry is that early on in the process, lenders are not held accountable for what they say. And I want to share a story that actually happened last week, right? I was telling you this earlier. So I have a client who I've been working with. I actually helped them get their credit, you know, over 580, which is where you need to get an FHA loan. And then they said this other lender offered them something. And I was like, all right. So they offered them whatever it was, 6% with a 0.5% lender credit, right?
Okay.
They said, you know, can you match that? I said, actually, absolutely, you know. Over the next 4 days, this was last week, a lot of stuff happened again in the world, the economy, you know, politics, whatever it was, right? Inflation. And it was a historically bad 4 days for mortgage rates. And they went up. They went from being a 4-month low to I think it was like a 3-month high, right? All within 5 days. And and now I'm talking to these clients over the next few days, and they're like, you know what, we really want to work with you. Like, you're teaching us a lot. You know, you always answer our questions. You make us feel comfortable. All the things that I pride myself in. So that made me feel good. And then they said, you know, but this other lender just offered us 6%, and now he's willing to give us 1% of a lender credit. And I said to them, look, I don't want to call anyone a liar because I don't believe in bashing competition. You know, that is bad karma, you know. But I said, don't you think it's interesting that if you just Google the news and see what's happened to mortgage rates over the last 4 days, it's been a historic bad stretch of mortgage rates, and all of a sudden he can offer you something better? And we were on a FaceTime or a Zoom. And I saw their faces. They were like, and they said to me, he's lying. I said, I didn't say that. But so it's unfortunate because, again, I don't like to say anyone's lying. But if someone were lying, you can't really hold them accountable unless they lock the rate that day. And if you're not in contract yet, often they won't lock the rate that day. So that all circles back again to you want to trust the person that you're working with, and you want what they're saying to make sense. With that being said, and I'll wrap this up, you do want to make sure you get the best rate. You know, when you're working with your lender, follow up with them weekly. You should have weekly conversations about what's going on in the market, what's going on in the news. This is going on in the news. What do we think is going to happen with mortgage rates? So now we know what's going to happen. So once you get the lender who you feel comfortable with, that's when you start focusing on rates and you start communicating on rates and seeing your different options.
And one thing that you touched on there, which I think is huge, right? We're very much accustomed to virtual meetings, right? It's a lot less likely, especially if you're operating all around New York State. You might not always get face-to-face time like this with someone, right? But I think Zoom or video conference, video calls, FaceTime, I think those are kind of underrated, right? Because if somebody is like misleading you in any way, you can kind of question them. Over the phone, you don't have the same feel. Even over Zoom, you don't have the same feel. I think in person is obviously the best.
Absolutely.
But second best option is like being able to look at somebody on a video call and just ask them these difficult questions. Hey, you know, how are rates faring given everything that's happening, and what does that mean for my loan, right? So I like that you bring that up. When what we talked about, somebody who's gonna be straight up with you about what's going on and what's happening with rates. Some people are like self starters, right? So some people want to like know this stuff for themselves. What are some metrics that people can look into just to kind of get their own feel for where the rates might be going or where rates might be headed? Even though we're at, let's say, a 4 month low right now, that's great. But to your point, if you don't have a deal in contract, you're not locking that rate right now, right? So let's just say somebody has been quoted on a certain rate. What kind of metrics should they be tracking just to anticipate where rates might go?
Great question. Something I always tell my clients is when you're going through the home buying process, keep yourself educated and pay attention to the news, but most importantly, pay attention to the 10-year note. The 10-year government bond, that is something that, for the most part, has a direct relationship with mortgage rates, right? So a week ago, when I was telling you rates were at, a 4 month low, the 10-year note was at 3.98, something like that,
Mm-hmm.
right? Over the next few days, it went up to, 4.25, which might not sound like much, but that is huge. When it's 0.3%, when you're only at 4.25%, that's a lot, right? So you want to pay attention to the 10-year note. And anytime you see it go up or go down, reach out to your lender and ask them, how does my rate look now? I see the 10 years going up or the 10 years going down.
I like that because I feel like a lot of weight is placed on the Fed meeting, right? This happens literally every time there's a Fed meeting. The very next day, you start to see, the headlines, and there's all this like, I guess all this anticipation of how that Fed meeting is going to affect mortgage interest rates. When in fact, it affects interest rates, but doesn't. I guess from what you're telling me, the 10-year Treasury will give you more insight on what's going to happen with interest rates than maybe the Fed meeting.
Absolutely, because you'll get Fed meetings and maybe that whatever was announced in the Fed meeting was already worked into the mortgage rates beforehand.
Mm-hmm.
People think, oh, well, they just announced a rate cut, rates are going to fly down. No, we've kind of anticipated this over the last month or two, right?
Yeah.
So the rates already have crept down a little bit. Nothing is 100% going to tell you what's going to happen with mortgage rates, but the 10-year note is the closest thing to that.
Got it. Got it. When it comes to shopping for lenders, a lot of people will like look online and they'll see, hey, the rates drop. They're reading headlines and stuff like that. How much importance should people place on interest rate when they're shopping for a real estate agent?
So I think the most important thing is finding the lender you're comfortable with. You want to ask them the rate to make sure that they're in the same ballpark of other people that you've been talking to. But when it's early in the process, it's really hard to tell exactly what the rate is. And you want to work with someone that you trust, that when they say, all right, this is your rate, or all right, this is what we're locked at, that you can fully believe that. Unfortunately, in this industry, sometimes I'm going to tell a story as an example, right? I had a client who he had come to me. He was a bigger pockets client, right? And he first bought an investment property in Syracuse. And I remember I was working with him. He said, look, if you give me a discount here, I'm going to work with you on the next one, right? Gave him a discount, gave him a great rate. He was very happy. And then on the next one, he was buying a multifamily in Queens. And he was going back and forth between me and this other lender. And he kept telling me, he's like, I love working with you. I love how you're always answering the phone. You're always giving me good input. Your emails are detailed. I feel comfortable moving forward with you. But this other guy is offering me this. Can you match it? Back and forth, back and forth. There's probably 2 weeks. It was getting exhausting, right?
Mm-hmm.
By the end, the other guy offered something, and I said, I can't match that. I wish you the best of luck. Maybe you want to work with me anyway, even if my rate's a quarter point higher. If not, all good is what it is.
Mm-hmm.
He ended up going with the other guy. And about 3 weeks later, he called me and he said, or maybe he texted me actually, and he said, this lender's really driving me nuts. I can't stand him.
Oh.
And I'm like, all right. I mean,
Yeah,
okay.
yeah.
What am I going to say?
Yeah.
And then another couple weeks later, he texted me, said, can I call you? I said, all right. He said, Mike, I just closed and I can't believe what this guy did to me. He originally had me at, a 6% rate with no points, and he ended up charging an extra $35,000 in points that I didn't see till the day before the closing. And I had to close that day or I was going to lose my earnest money.
Oh my goodness.
And I was honestly shocked. I I typically give people the benefit of the doubt.
Yeah.
You know, I wouldn't think
I mean,
most professionals would do that.
you take two zeros off of that, that's still kind of frustrating. Like you got to pay $350 extra dollars, let's say. Like even that's like, whoa, what happened here? 35 grand? My
You
goodness.
should always know ahead of time if you're going to pay anything more.
Yeah.
And 35 grand is ridiculous.
Yeah.
And he said, yeah, he told me, you know, it is what it is, and I had to close or I was going to lose my earnest money deposit. So the point being is that rates are very important. But unfortunately, there's too much wiggle room in this industry where lenders can say they're going to give you a certain rate, and it ends up not being that. So that's why I put the emphasis on trust and reliability. Those are more important than shopping for rate early on. As the process goes on, make sure you're very educated on what's going on with rates, what buy down options you have, what loan options you have with that lender that you trust.
Yeah, I feel like there's kind of like a similarity in our like in the real estate business, on the real estate agent, real estate broker side, where sometimes you have to deliver tough news, right? Expectations change, right? So if somebody wants to sell their property for $1 million and the market just doesn't support it, and you tell them, hey, your property's worth 925, let's say, for example, right? That's just a number, kind of like what you're saying with regards to interest rates. I think what's more important is like, how do we arrive at that number, and then how much confidence do you place in the person who's sharing this number and the reason why we're at this number, or the reason why, in your case, you couldn't offer what somebody else is offering, right? It's one thing to say, hey, no, you know what, take that other offer. I can't offer that. It's another thing to say, hey, here's why I don't think that's possible, right? So that's thanks for sharing that. I think that could help a lot of people when it comes to vetting a lender. Just making sure that they're not just looking for interest rate. Make sure that they're paying attention to responsiveness and communication, paying attention to like their gut, right? Like how relatable or how comfortable do I feel with somebody who's handling all of this information. And experience plays a big part too, like just knowing what kind of questions to ask and what kind of things to look at when we're anticipating what will happen with interest rates or anything else. So that's super helpful. I'd love to get into like some of the loan products that you're seeing that are now becoming available. So a couple come to mind. One of the last people that we interviewed was actually a veteran who used the VA loan. And you mentioned that there's something new and exciting for veterans.
Sent it to you yesterday. Yeah, it was good timing. There's now a VA renovation loan. Renovation loans have been around for a while. We've done a lot of them together. We do a lot of investors, multifamilies, and people who are looking to renovate properties and don't have the cash to do it, right? The way the renovation loan works is if you're buying $1 million property, you want an extra $100,000 towards renovation. It's all in one loan, all in one monthly payment. You get the renovation funds in increments, as you're doing the work. They don't just give it to you all up front. And it's a great product. Just like anything, nothing's too good to be true. With the renovation loans, the rates are typically a little bit higher. It's a little bit more stressful because now you have a contractor involved, you have a HUD consultant involved, so on and so forth. But before yesterday, this was something that you only could do through a conventional loan or through an FHA loan. Now you can do it through VA. And the best part of a VA loan is you can put 0% down. So now you could put 0% down and you could finance renovation. This is something that I'm super excited to start working with.
That's awesome. What are the limits on the renovations? Because I know with you have your FHA 203K loan, which has like a cap, right? It has a limit on the renovations. And then there are other loans that have like a higher renovation budget that you can include in the purchase. Are there any such limits with the VA renovation loan?
So typically I pride myself on memorizing everything in my head. Being that I got the email yesterday and I was lucky enough to go to the Knicks game last night, I haven't gotten to study all of it yet, but I'm going to send out, I have my weekly email blast, I have my Instagram. I'll be blasting out all those details for sure.
Oh,
I'm
nice.
sure there will be certain loan limits that you can't borrow above. I'm sure also things like whatever renovation you're doing has to help increase the value of a home. The example I always give is you can't borrow $100,000 to build an elevator. That's not going to increase the value. But I will get those details, and I'll probably have a meeting with the team to make sure everyone knows we're on the same page.
And that's a good point. I think for anybody who's getting a renovation loan, they should focus on things that are going to improve the value. So kitchens, bathrooms, maybe adding a bedroom, things like that. And then just overall, like cosmetic finishes are okay, but they, to your point, and something we've talked about here before, cost does not equal value. So putting those renovation costs towards something that could boost the value is the best way to go. And this is exciting. You know, I think renovation loans provide an opportunity uh, for people to be competitive in the market. If a property is not in great physical standing, a lot of people are going to be deterred from that, right? Because they want something that's move-in ready. And then there are going to be other people that are like, this doesn't need enough work. Let's say investors, right? Investors will say, hey, this doesn't need 200 grand worth of renovation. There's not enough of a spread to flip this property, right? So people who are looking at renovation loans or people who are looking at properties that need some fixes, they're like in this middle ground, right? Like it kind of makes them, it gives them a slight edge, right? Above the people who are looking for, move-in ready, fully renovated.
It's not an easy process to take on. You know, when I have a client who's doing a renovation loan, I always say, people who are willing to do a renovation loan, you better be built differently because it is a lot of stress. You know, my wife and I, we bought our house, we did a full gut renovation. Not easy, you know. Thankfully, my wife made 98% of the decisions. So it's a lot of work. It's a lot of communication. You have to have the ability to not get overly stressed when numbers change a lot and timelines change a lot. And if you're going to take it on, make sure you have the capacity to do so.
Yeah. How long do people typically wait, or how long does it take for people to typically like move in after they close on a renovation loan? So does the project take like 4 to 6 months? Let's just say we're talking about like 100,000, give or take.
I would say 3 to 6 months.
3 to 6 months. Okay.
Yeah.
All right.
It totally. I could do a million what if scenarios because it really
course.
depends. But 100,000, I would say 3 to 6 months.
3 to 6 months.
Yeah.
Okay.
And what actually the renovation loan does is, if you're not going to live there for a few months, you don't have to make those mortgage payments out of pocket. You can finance it into the loan.
Got it. Okay.
Yeah,
Okay.
which
So
is a
you
nice
can
benefit.
you can hold off on making payments and you can finance those payments until you're actually moved in.
Correct.
And this is good. It gives people flexibility, right? You have, if you're out in the market looking for a property, there are going to be those who need to move in a week after closing, a day after closing. But if you can afford to kind of stay put in the time being while the property is being renovated and move in afterwards, this definitely gives you a slight edge. Aside from the VA renovation loan, are there any other loans that you're interested in that are like just coming to market?
So we just opened up a doctor loan, a physician's loan, where the main benefit there is if you are a doctor, you know, there's different types of licenses you could have. Again, those details I'll shoot out on my email blast on Instagram. Normally, if you put less than 20% down on a mortgage, you're going to pay something called PMI, private mortgage insurance. It could be, if you're taking a $800,000 loan, it could be anywhere from 200 to 800, you know, depending on your credit score. If you're a physician, you don't have to pay PMI, and you can put as little as 5% down.
Oh, wow.
Yeah. So there's
Nice.
other details there that, again, I'll blast out to the community. But it's a great product if you are a physician. Can save you a good amount of money monthly.
That's awesome.
Yeah. I'm I'm excited about that one too.
I'm going to take a quick break so I can see if there are any topics. All right, so here's my last question. I think as New Yorkers, normally we just have like this built-in like BS meter, right?
It's so true. Yep.
What should borrowers look for in a loan disclosure or an offer sheet or anything like that that's presented to them by their lender?
So depends on the point in the process, but I mentioned before buying down points. You know, if you have a rate and you want to pay a premium to lower the monthly payment and lower the rate, that's something that you'll discuss with your lender. If that was never discussed and you get a loan estimate and you see points on there, it'll be in the format of a percent of the loan amount. So if it's a $600,000 loan, it might say 2% of the loan amount, $12,000. If that's on your loan estimate and that was not mentioned to you, that is a huge red flag. And unless there is a really, really good explanation, I would recommend you might want to go talk to another lender, because that is BS meter 10 out of 10. And that means that they were hoping that you wouldn't see that, and
Ooh.
you could, you know,
Yeah,
imagine the
$12,000.
risks.
That's yeah. So aside from that, is there anything else that people should look out for? Not just to call BS on something, but just things that they should know about.
Yeah, I like to go through all the closing costs of my clients. So things like, some people who are very big on shopping numbers to numbers, and they'll say, well, your title insurance on this purchase is $5,000, and their title insurance on this purchase is $4,500. Your attorney orders title insurance. So every lender has to estimate and disclose an educated guess on what title is.
Mm-hmm.
The cost is going to be the same. Either your attorney's, most of the time your attorney orders it, or you might have your own title company, but the lender is not ordering your title on a purchase. So things like that, just to understand that certain fees are lenders, like the lender origination fee, which should be anywhere between $500 and $2,500, right? Any points that are there, the rate, those are all lender things. But state mortgage tax, title insurance, escrow, a lot of those are just estimates. The state tax is an exact figure, but escrow and title insurance, those things are estimates. And don't use one against the other, comparing one lender to the other, because that's going to be a complete waste of time, because no matter what lender you go to, the escrow and the title insurance is going to cost the same.
Thank you, man.
Yeah.
This is huge. Is there anything that I didn't ask you or anything else that you wanted to mention?
Yeah. In the lender world, and I think in the professional world these days, reviews are incredibly important. It's something that I put a lot of effort into probably the last 3 or 4 years. I now have, I think, 150 reviews. So I strongly urge people to read reviews, when you are shopping professionals. And if your lender or realtor or any other type of professional does a good job and you're like, wow, I really want to do them a solid, offer to write them a review. It goes a long way.
Nice. Yeah, so look at reviews. I like to play around with review. I just recently did this. I'm looking up bicycles for my son. So I'm looking at different reviews. So they recommend looking at reviews based on relevancy.
You getting Nathan a bike?
Yeah, he's gonna get his first bike. Yeah.
Wow. All right.
So I'm looking at relevancy, right? What reviews seem relevant to the topic that I'm searching, and then the time. So I think when it comes to looking up reviews for a lender or for anybody else, it's important to look at what have recent reviews look like, and then look for reviews that are based, that might be based on the topics you're looking at, right? So if somebody's looking up a lender based, and they're mainly interested in the interest rate or the customer service or whatever, I would recommend looking at the reviews to kind of look out for those specific details. But as always, man, dude, 150 reviews, good stuff. Keep doing your thing, man. Thank you so much for joining, man.
Absolutely, dude. This was awesome. Anytime you want me, I'll absolutely be here.
Let's do it, man. All right. Until next time.